This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. European Union leaders on Friday agreed to give more financial and military aid to Ukraine, but a full day of talks in Prague's ornate royal castle seemed to bring them no closer to deciding on whether or how to cap gas prices. Most of the EU's 27 countries want a cap on gas prices, but disagree on the details, with options including a cap on all gas, a dynamic corridor, a price ceiling on gas used for power generation specifically or on Russian gas only. The EU has been discussing the matter for weeks, so far without result, although the 27 have agreed other joint steps to help them weather an acute energy crunch as runaway prices threaten to bring about a recession in the bloc.
Oil output target cuts agreed by OPEC Plus producers will leave them more supply to tap in the event of any crises, OPEC Secretary General Haytham Al-Ghais told Al Arabiya TV on Friday. OPEC Plus, which includes the 13 members of OPEC and 10 allies led by Russia, agreed on Wednesday to lower their output target by 2 million barrels per day. OPEC's de facto leader Saudi Arabia said the move was necessary to respond to rising interest rates in the West and a weaker global economy. The decision was criticized by the United States, where the White House said it was a sign the group was aligning itself with Russia.
Moving on to the top news in the energy sector.
India's monthly fuel demand in September was at the lowest since November 2021, government data released on Friday showed. Total monthly fuel demand in September fell 3.6% from August, although it was up 8.1% when compared with September 2021. When we look at the drop in Indian oil demand, part of it had to do with seasonal maintenance of the refineries, not necessarily a softening of the economy, said Phil Flynn, analyst at Price Futures Group in Chicago.
Oil prices jumped about 4% to a 5-week high on Friday, lifted again by an OPEC Plus decision this week to make its largest supply cut since 2020 despite concern about a possible recession and rising interest rates. Oil rallied for the fifth day in a row even as the dollar moved higher after data showing the U.S. economy was creating jobs at a strong pace gave the Federal Reserve a reason to continue hefty interest rate hikes. A strong greenback can pressure oil demand, making dollar-denominated crude more expensive for other currency holders.
Next, we have the top news in metal markets.
The premium for aluminium shipments to Japanese buyers for October to December was set at $99 a ton, down 33% from the previous quarter, reflecting weak demand and ample inventories, 5 sources directly involved in the pricing talks said. The figure is lower than the $148 per ton paid in the July to September quarter and marks a 4th consecutive quarterly drop. The premium is below $100 for the first time since the October to December quarter of 2020. Japan is Asia's biggest importer of the light metal, and the premiums for primary metal shipments it agrees to pay each quarter over the benchmark London Metal Exchange, LME, cash price set the benchmark for the region.
Copper prices lurched lower on Friday after U.S. jobs data hardened expectations that U.S. Federal Reserve officials would stick to their drive to crush inflation. 3-month copper on the London Metal Exchange, LME, dropped 1.5% to $7,490.50 a ton by 16:15 GMT, extending losses to a third session. U.S. COMEX copper futures slipped 1.3% to $3.40 a lb. Solid U.S. job growth and a decline in the unemployment rate in Friday's data reinforced views that more monetary tightening would be needed to contain inflation. We will now look at the top news in the agricultural sector. Shipping and commodities firms will commission more ships partly powered by liquefied natural gas, LNG, next year while ramping up trials for biofuel bunkering as they seek to cut emissions from ship operations, senior executives said this week. The shipping industry is seeking to reduce its reliance on oil as it tries to meet carbon emission reduction targets set out by the UN's International Maritime Organization. These include the shipping industry cutting carbon emissions by 40% from 2008 levels by 2030, and overall greenhouse gas, GHG, emissions by 50% by 2050.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.